Hello, my name is Shreyans and this is a series on DIY personal finance planning. Last time round, we did an audit of our current financial situation where I hope you wrote down the different measures about the different aspects of personal finance. This time round, we're going to do something that is equally important but very rarely talked about, and that is trying to understand our family's financial situation. Because let's face it, we do not live in isolation, right? Our decisions impact our family's decisions impact us. So it makes all the more sense to consider our family's financial situation while we do our own financial planning. And how do we do that? Let's look at it. All right, so we're going to understand a few things, important things about our family's financial situation, right? Now, the thing is that let's suppose some emergency arises or something goes wrong, unfortunately, in our family, which might lead to financial constraints. In that case, even your financial planning goes haywire. So if you already have a good definitive understanding of the family's financial situation, you can understand that, okay, what is the sort of contribution that I need to make towards my family and what are the various aspects that we can plan even as a family. So you can not just help your parents actively, but also be prepared if something goes wrong. And which is why I feel that instead of just thinking about our own financial situation and thinking about financial independence just when we start earning, a more logical approach would be to also engage with our parents while making financial decisions. We help them make better decisions and we consult them so that we can also make better decisions. And if we do that properly, then I think we can optimize and remove a lot of the duplication and the wastage in financial planning. We'll look later how. Now, the most important or the underlying question to really ask yourself is that how dependent is your family on you, or how dependent will they be in the future, right? Either presently, if not presently, then in the future, right? Because the level of their dependence on you would also determine a lot of your planning and especially risk taking ability, because let's say that your parents will be dependent on you for income, right? Let's say a few years from now. In that case, you have to be slightly cautious about the investments that you're going to make and about the expenses that you have planned, because you also need some short return so that you can contribute towards your family, right? So the first aspect to look at it is the current income and expenses, right? So what is the current cost of living of your family as a whole? And what you need to assess is that if you need to make any contributions, right? Or if you're having excess earnings, then you could just contribute to the family's overall saving. So just see if any contribution is required from your side. If not, then well and good. If it is required, then plan it within your budget. Now, this is the most important thing with regards to the planning of our parents' finances, and that is the time to retirement and how much money would they need to spend, would they be spending every month after retirement? Because let's face it, after retirement, the income stops, but the expenses don't stop. So now this is something which this whole concept brings in expenses and income and also investments. So you could evaluate that the time that you have left. For example, it could be 10 years, 12 years, 15 years, or it could be even 3 to 5 years. So if you have a longer time period, you could start investing into a separate account so that this is dedicated towards taking care of future needs, right? And you could start with equity if you have a long time horizon. And as the retirement comes nearer, then you can slowly start shifting some of it towards bonds so that you could get regular interest income, right? So this is how you can plan your investments. You can actively engage with your parents and do this planning well before the time of retirement comes so that they can be free of any sort of stress or worry after that. The next aspect is health and life insurance, and I think I cannot stress enough how important this is, especially because as we get older, right, the chances of getting any sort of illness increases, and also the severity is also very high, right, compared to somebody who's younger. So God forbid, but if any of your parents catch any illness, then you might end up spending lakhs and lakhs of rupees. And again, all the financial planning that you've done or all your savings might get exhausted, right? So that is why having health insurance is a must. It is must even for young adults like us, but for parents, it's just extremely, extremely important because the impact of something going wrong is exponentially more, right? And life insurance. So what happens is that even if as young adults we start earning, the major burden of the family's finances is still on our parents, right? It could be a father who's the major earner, or both a father and mother can be contributing equally, but still they are taking care of the bulk of the family's financial burden. So losing any one of your parents is difficult enough, it's extremely tragic enough, right? So you do not need to be in a situation that after that you also have to worry about finances, right? So having life insurance can help you protect against that, and that is why it is extremely important. The next thing is liabilities, right? One thing we need to understand is that our parents come from very difficult times, right? Where opportunities to earn money were very limited compared to our times, and the economy was also getting out of trouble and moving towards better times, right? So it is very natural that a lot of our parents might have different types of loans. So see if there are any loans, any home loan or education loan, or even if there is a business loan, right? Because in the older times there was not a lot of separation between a business and an individual. It was just sole proprietorship, right? So in that case, try to evaluate if there are any liabilities, the things that we need to know, and evaluate if you can make contributions, because the earlier the liabilities are paid off, the better it is, right? And finally, we have tax planning. Now this is very interesting, and this is something that we can plan year after year. Especially, for example, if in your family there are a couple of people earning and the other people are not really earning a lot of money. So what you could do, if you have multiple sources of income, so you could record that income under the account of that person who doesn't have enough income to come in the taxable bracket, right? So you could have a lot of savings taxes, and then if you also make investments under different accounts, so you there are a lot of tax deductible investments as well. So in that case, also you can save on taxes, right? Obviously, all of this needs to be done in a legal manner. So please be very careful about that. But yeah, if we distribute our family's total income among the different people, we can really minimize our tax liability, and we can also manage our investments in a more tax efficient manner as well, right? Now, I understand that talking about our family's finances with our parents can be a really difficult situation because we're simply not used to having such conversations. But I hope that you can take responsibility, you can show commitment and ownership. And I think, at least I hope, that your parents would be more than willing to engage with you in this conversation if you can help them plan the finances in a better manner. Right. So that was more or less it about this topic. I feel that is very, very important. It is extremely, extremely under discussed. That is why I wanted to keep it separate as well. So up till now, what we've done is we've prepared the foundation. We've understood our financial situation. We've also, hopefully after this, understood a little bit about our family's financial situation. So now what we're going to do is we're going to pick up the different aspects of personal finance, the 7 aspects, and we're going to understand those aspects and also start taking actions simultaneously. So one is understanding the different subsets of the different aspects, and then also taking action at the same time, because all the planning is useless if you don't put it into action. So yeah, that's pretty much it for now. I hope you have some courage to go and talk to your parents about this. And if you found this helpful, then share it with a friend and encourage them to do their own financial planning as well. So I'll see you next time, and we're going to talk about each of the aspects of personal finance.